Multiple indicators are pointing towards this move developing for Bitcoin, and it's a good thing when we have confluence among the indicators, I might add. Hey guys, it's Keith Allen. Hope you're having a good week. It's moving along pretty quickly, right? And things actually, we had some economic data this morning, and it seemed like kind of a nothing burger for the market. Maybe at this stage, rate cuts coming in like a week. Maybe at this point, it's like, unless it's a drastic miss, the market doesn't really care. Quarter point is baked in. That goes without saying at this point. And, so the Fed is on target to start cutting, and the market is anticipating that at this point. So we're going to look at these indicators. We're going to, of course, look at fire charts and look at order book liquidity and order flow data as well in this analysis. But I'm really encouraged by what I'm seeing in these indicators at the moment on the weekly time frame, and I'm going to share all of that with you here in just a few. First, of course, a bit of housekeeping. If you like the streams, do me a favor, smash each and every one of the buttons, and by all means, share a comment. And on that note, comments are open in the live stream if you're watching on YouTube, and if you're not watching on YouTube and you're watching over our next, join us over on YouTube if you want to chime into the conversation. Otherwise, if you want to leave a comment on the post on X, then by all means do so. I enjoy reading them all, and I engage with each and every one of them. So give you a second to smash the buttons. While you're doing so, make sure that you hit the subscribe button. It's the one up there in the corner, that the little bell. Hit that one and make sure that you hit that one so that you never miss any of the live streams. And hey, while you're at it, go ahead and hit the share button. Share this with somebody. Share it with your network and help us grow the channel. I greatly appreciate the support you guys have been showing me. So without further ado, let's just jump in and share a screen here and take a look at what's happening here on the charts. Because, we can speculate a lot about where we sit in the trend. We can speculate on whether we're going to go visit the lows again. We could speculate on whether the top is in, or we could just look at the charts, because the charts just don't lie to us. And as you can see here on fire charts, things trending up here on the weekly chart, as there has, of course, been, and the order flow shows here that there has been some buying and selling on both sides of this move here. But here today, we did see a little block of bid liquidity move up from the low 50 to 52K range up into the active trading zone. That was filled here. And now we're knocking on I think the 21-day moving average here. Let's go to the daily and see. Yeah, so at the moment, this 21-day moving average serving as resistance, as it does on the weekly time frame as well. This really is where the range that we are wedged in at the moment. So looking for a break beyond this at the lower time frame, we're talking around here 58,700 or so, and then on the weekly, as things develop, that's at almost 63K. So what is important about, or what's interesting about this, is that we see some confluence here on fire charts of where the liquidity is, and we of course see resistance here overhead up to 62. But if we zoom out a bit, we can also see that liquidity up above is fading. All right, so yeah, we have some decent resistance here right overhead, but if we can get past this level, we can get past this first rung here, and clear that 21-day moving average, then I think we've got a really good shot at moving up here. And so, it'll be one level at a time until we get up into this. But the fact that this is fading up here and this is developing down here, building support, fading resistance, are all good things. Now, sure, some of this resistance has drifted down into the active trading range, and that's certainly noted, right? But it's easier to take out smaller blocks than it is to take out a big, 50, 60, $70 million wall. And so that's really what we're facing. And we're seeing that we've got some bid development down here. And as soon as we get through this, things might get very interesting, maybe at an accelerated pace, with the FOMC meeting literally 1 week from today, right? The 17th and 18th, and the announcement coming up on the 18th. Going to be interesting to see where price goes from there, right? Anticipated rate cut coming of a quarter point. And from there, a lot of people think the market's going to dump. Maybe it's going to be a buy the rumor, sell the news kind of event. But the outlook for the backside of things here, meaning post rate cuts, post election, I think we're seeing some data that does support the soft landing kind of narrative more so than the hard landing, and that's why the market seems to like what's going on. That could certainly change. We've got another week of data points coming in, and like I said earlier, unless it's a huge miss, what we saw today was a little bit of a miss, but not massive, and that certainly didn't get anybody riled up in terms of what we saw in the market. So will be interesting to see what next week brings. So back to the charts here. The handful of indicators I'm going to share with you are ones that have been battle tested and that I trust very, very much. And we could start with a very common one down here. And you'll notice we're looking at the weekly chart, and that is the MACD. Now, the MACD down here is kind of a momentum indicator, and it's very easy to read this thing. As you can see, we have been in a downtrend here. However, it's starting to fade a little bit. That momentum is fading a little bit. And if you look on the daily time frame, you can see that actually it's already flipped green here on the daily. If we look here, trend precognition, we have two different trend precognition algos running. And in full disclosure, yes, I'm a partner in Material Indicators, which develops this indicator, or these indicators, I should say. And so what I like about this is you see this A1 slope line here. This is the real-time indicator portion of this indicator. The dots, the green dots and the red dots are signals. The green arrows and the red arrows are signals. But this is moving in real time. And you can see that it reverted yesterday from a downtrend and clicked back up to the uptrend. And that is playing out as we speak here on the daily time frame. Where the MACD also has confluence with that. Now, if we go to the weekly, we can see we're on a long signal that this actually opened on the weekly open here. And this technically is a tentative signal. It will print at the weekly close. It could potentially invalidate, and it would take a move below last week's low, take a move down to that 52.5 range to invalidate this. And you can see that this trend line, this moving average, this 50-week moving average has been tested once and twice already. Close to it here on a retest yesterday, but it didn't happen. And so we are, as you can see, having some confluence here with this bottom. And so this is something that we had looked at previously in terms of, kind of looking for a double bottom here. And as I showed you yesterday, I think I may have that marked on another chart here. Let's see if I do. If not, I'll mark it for you. I don't. So what I was alluding to yesterday was, the fact that I had been looking for a double bottom coming off of this low at 49.5. Which didn't materialize. I really expected that to happen over the weekend, and it didn't materialize. However, after further examination and looking at this with some different perspective on a line chart, we could see we actually did get a double bottom here, and now we have this lovely double bottom bounce. So this plays out, or this plays into, I should say, the series of death crosses that we've seen and the now golden cross that we are seeing on the weekly time frame. And this is another one of the indicators that points to upward momentum. So you can see we have shifting momentum on the MACD. We have shifting upward momentum on the trend precognition A1 algo. It will take to fire a signal on this algorithm down here. This orange A1 slope line needs to cross this blue center line, which could happen here at the weekly close. If not, then maybe it reverts. But in the meantime, it looks like it's trending in that direction. Let me zoom in on that and make it a little bit easier for you to see. You can see it's trending, and it's trending sharply in that direction. This shows us not only directional momentum but also velocity. And so, there's times where it's kind of flat, not a lot of energy behind it, and there's times where it's more diagonal or more vertical, and this looks pretty good right here as we move into the end of the week, and of course, next week's announcement. So we could conceivably get another signal here at the weekly close. We could conceivably get back-to-back signals, and we could also see this MACD flip green as well. So that's kind of what I'm looking at on the weekly time frame. But I want to show you one other battle-tested indicator, and that is one that pretty much everybody is familiar with, I think, and that's the RSI here. And the RSI is one that I have a lot of confidence in as well. A lot of people trade RSIs. No surprises there, but something that I do that I don't know that a whole lot of people do is I track this weekly level very, very closely. As you can see, I have this green line here at the 42 line, and this really has served well as an indication of the trend. And any time that the weekly RSI dips below that 42, Bitcoin price seems to trend downward. And anytime it is above that level, as you can see here, there was a breakout and we started trending upward. Well, we've retested this a few times, right? First retest, and it didn't get super duper close, but the first time we came close to that here through the past year is right here in this consolidation range around 25-30K, which largely was considered to be really the consolidation that led to this breakout bullish move that we've seen throughout the past year. We revisited this or retested it a couple of months ago, back in July, and this was another occasion where we had a dip, a pretty decent dip, as a matter of fact, and price recovered. We've now been back down in this range. All these big dips take us back down here, but we have once again averted this disaster of crossing below this 42 level on the weekly RSI. Price-wise, I think it's around 50K. If we were to close weekly below that level, below that 50K level, we might get into that territory here. So that's something that we're hoping to avoid, at least those of us that are macro bullish on the trend. And I'm macro bullish on the trend because the trend is still intact here. You can see this line still very much intact. And you can see that trend precognition, the RSI, and as I showed you, are all kind of pointing towards the same move, as is the golden cross between the 200 week and the 100 week moving average. All of those point to uptrends on the weekly time frame. And of course, what was the other one I showed you? Oh, the MACD, which is starting to flip in that direction. So, a lot can change. Certainly, there could be a catalyst that changes this trajectory as time goes on. But I think that we are in store for a continuing uptrend as we head into the FOMC meeting next week. And potentially it could be a buy the rumor, sell the news event. We might see a little pullback even on this event, and then a recovery. So I would say that if you're prepared for that in either direction, listen, if you're a long-term investor, you might not want to continue trying to trade this because it's really been challenging. I'm not going to lie. It has been challenging. If you're a long-term investor and you're just finding entries, dips to buy, then you're likely in good shape here. If you're trying to improve your cost basis or you're trying to swing trade this, it gets a little tricky. So I would caution you to, know what your invalidations are, pick your setups, don't chase it, wait for price to come to you. Aside from that, imagine if we have the market right now kind of preparing for that FOMC meeting on the 18th, which is a week from today. And we see price continue to appreciate. They make the rate cut announcement. We have a bit of a shakeout. and then we see the trend continue. So, those kinds of moves happen frequently, and really the best way I know to read whether we're going to see that kind of volatility is to look at the order book. And the old adage, liquidity dampens volatility, certainly comes into play here. As you can see, we have a big, nice block of liquidity here that is currently keeping us from shooting up. And likewise, we have liquidity here that's keeping us from shooting down. So as we get closer to that Thursday announcement, what's going to happen? What's the dynamic of the order book going to be like? Are we going to see things move around? Are we going to see things open up a bit where there's a place for some volatility? As you can see, we have a little bit of a gap here below this 56K level. And wow, this just happened here. Actually, yesterday we saw this block come into this 46K level, and now it's disappeared. So that's interesting to note. Let's see, did it go any lower, or did it just disappear? Did it turn into a market order? What happened here? That's a new development. It didn't go lower. Let's see if we can notice it on a lower time frame here. Right here. So, conceivably, you can see that there's some market order happening, action here out of purple whales at the time that was rugged. So it could have conceivably been turned into a market order. That's a possibility, and that would mean that they're chasing price a bit. And if they can eat through this resistance here, which is now 8 million, and we can work on this, I could certainly see us being in position up at this 65K level potentially by the time we are heading into that FOMC meeting, and even if we break past this, of course, we then have some major resistance up here at the 70K level, which obviously leads us back into that all-time high territory if and when we can break past that. This has diminished a bit. Some of it has moved down, as you can see, but it's going to be easier to take out this 20 million than it would be to take out 52 million here up here. And so those are things to consider as well. Looking at this actually, I don't think this is necessarily from that block above because of the size of it. I was just noticing this was 52. Really just a little bit of that has been removed. And this looks like it's, where were we? It was at 15. Oh, well, actually it might be. That's about 7 million that moved into place. So this could be from here, actually. So that's interesting to see as well. But what I do like is that we're seeing some buying. We saw brown whales earlier buy up into the liquidity here, and so those are all good things to be happening. In terms of what that means, the indicators. Let's go back to the candle chart here, and we have, if you want to put this narrative together, we have double bottom, we have up signals we have macro trend still intact. We have up signals on trend precognition. We have the A1 trend precognition algo showing upward momentum as well. We have the MACD rolling over a bit. We have the RSI respecting that important level down here at 42, which I showed you on this chart as well. And so to me, those are the signs that are pointing to, and the golden cross here between the 200 and the 100 week moving average. So those are what's pointing up to me. Whether we can get through this resistance today or not remains to be seen, but I do like the way things are trending here at this stage in the game. Looks like we got a couple of comments in here. Mark, great content as always. Missed the first 10 minutes, but we'll review once uploaded to YouTube. I know turn alerts on, hourglass, purple, send, or yes, all of those things. And yeah, it's actually streaming live on YouTube as well. So you should be able to go back and rewind this thing. Finally get to catch you live from Lebanon. Hey, wow, man, I appreciate you following along. Thanks for the alpha and taking the time to make these videos daily, boss. I'm not the boss. You guys are the boss. I'm here doing hopefully what you guys are looking for. And if you like it, smash the buttons. Gonna wrap it right there, guys. If I see anything major developing, and this is, we're getting pretty close here. You can see we're at 58, almost 400 at this point, and we're getting very close to where that daily 21 moving average is. So this is a level that we got to knock out before we can go to the next rung, right? And so looks like we're going to give that a good test here today. Let's see if we can break through this. That would be, doing so would obviously open the door for much more upside momentum. So that's something I'm going to be watching for throughout the day as well. Have a good one, guys. And as always, trade safe, my friends.